The market went absolutely insane today. There are so many different things going on that I want to discuss in this video, whether it's UNH falling by 3% or broader effects in the chip market. We are going to go over all of that today, but the primary focus is going to be on Zeta. They are set to announce their earnings in just a couple of weeks, and I want to talk about how this stock could double over the next 6 months if they perform well on their top and bottom line numbers. But before we get into that, UNH traded down 3% today. It's now sitting at a stock price of $291 per share, and this is very similar to a price where insiders were buying the company back in May of this year. And the only bad thing that I could find around UNH is some concerns around their Q4 2024 earnings report, where they left off a loss of $7.1 billion due to their exit in Brazil, but included a $3.3 billion gain of a sale from US assets. The thought is that the company did this to offset some of their rising medical costs, and this is obviously seen as a big no-no. It doesn't sound like they financially actually did anything wrong. However, this may have led to Andrew Whitty, their former CEO, actually resigning from the company. Obviously, this is not a great thing. However, in my opinion, this just adds fuel to the fire leading into their earnings. I talked about this in my previous video. Go check it out if you want more details. But I think what this does is it just builds more negativity. And if UNH comes through and announces anything positive in their upcoming earnings, we could see a major move up in the stock price. But the big news in the market today came around Nvidia, because the US government is now going to let them resume selling their H20 chips to China. And this is a massive deal for Nvidia, because during their Q1 earnings report, they projected that these restrictions would result in a loss of around $8 billion of revenue. So with these restrictions being lifted, Nvidia could bring in an additional $16 billion of revenue over the next 2 quarters. So it's no wonder that Nvidia's stock price skyrocketed today, up over 4% in a single trading day on a company with a market cap of over $4 trillion. And this had a broader effect across the market because AMD was also allowed to resume the sale of their chips to China, which sent AMD's stock up almost 6.5% in a single trading day. And another big beneficiary from all of this is a company that I own, which is Super Microcomputer, which went up almost 7% today. However, one company that did not move up today is Zeta, and that's the company that we are going to be talking about today because they are going to announce the earnings here in just a couple of weeks. And this is a company that back in February of this year was trading at around $24 per share. And if you go back a little bit further, this stock was actually well over $35 per share, but has since fallen by over 60%. And the main reason that Zeta fell so much back in November of 2024 was because a short seller came out with a paper claiming that a lot of Zeta's financial information was false and misleading. That short seller was Culper Research, and since that time period, Zeta has actually done their own independent audit of their finances and hasn't found any sort of wrongdoing. And what's very interesting about this report is that even some of the basic things from Culper Research, they got incorrect, such as their auditor. So Zeta's independent auditor is Deloitte. However, Culper Research claimed that they were getting their annual reports audited by Ernst & Young, which again, the company came out and said is not the case. So there are some clear misunderstandings here from Culper Research. However, the stock hasn't yet recovered back to those highs prior to this report. So if you aren't aware, Zeta is a cloud-based AI-powered marketing platform. What they allow companies to do is consolidate a lot of their different marketing campaigns into one platform where they can manage all of these different campaigns in a single location. And this is a massive market. Every business needs to market to their consumers. And what Zeta does is they allow their customers to actually see how well these marketing campaigns are working. And that is critical because these customers at the end of the day want to make sure that their dollars are going as far as possible to target and bring in new customers. And right now, ZETA is expected to announce their earnings on July 30th. And right now, ZETA is at a very interesting point in their business because they are clearly a growth company still. Their revenue year over year increased 36% in Q1 of 2025 to $264 million. And they've also completed 15 straight beat and raise quarters in a row. So they are continuing to beat their numbers and then also raise their guidance for the upcoming quarter. However, one thing that the company is starting to transition their focus into is reducing their stock-based compensation. And this focus on reducing their stock-based compensation should have a big effect on their bottom line. Their GAAP EPS a year ago in Q1 of 2024 came in at negative 23 cents. And of that, they actually had a stock-based compensation impact of 23 cents. So if they didn't report that, they would have had a very positive GAAP EPS number. However, this year we have seen them actually reduce this stock-based compensation number. In Q1 of 2025, they reported only a 16-cent impact due to stock-based compensation. And that resulted in a non-GAAP EPS of 9 cents or a GAAP EPS of negative 10 cents. But still, ZETA is a company that is primarily focused on growing their top line numbers. For Q2 of 2025, they guided for revenue growth of around 30 to 31% or $295 million to $298 million of revenue. But like we mentioned, this company has beat their guidance for 15 straight quarters. So if they come through with 30% revenue growth, that will likely be considered a miss by the market. They need to put up at least 32% revenue growth. But what I personally think is I would not be surprised if ZETA comes through with 35% revenue growth. That would be around $307 million of top line revenue. But here's the thing, even if ZETA only posts 30% revenue growth year over year, we could still see the stock make a major move in the upward direction. And the way that ZETA does that is by posting positive GAAP EPS. In the last 2 quarters, we have seen them post negative 10 cents of GAAP EPS and positive 10 cents of GAAP EPS. And we have seen a consistent trend towards positive trailing 12-month GAAP EPS over the last couple of years. So if the company can continue this trend and get to positive GAAP EPS over the next couple of quarters, we could see this stock make a huge upward move. Right now, ZETA is trading at a forward P ratio of a 22.62, and their PEG ratio is sitting at a 0.75. This company reminds me a lot of Palantir just a couple of years ago. Palantir was starting to break through to profitability, and then once they hit a profitable state, they continued to drive their EPS up in a major way, and they also saw significant top-line growth. If ZETA is able to maintain around 30 to 35% top-line growth and get to profitability, we could see a huge move up in their stock price, especially if we see some valuation expansion. Keep in mind though, I do own a number of companies that we talked about in this video. I own ZETA, I own Super Microcomputer, I own AMD, and I do own United Healthcare Group. All of those companies I hold within this portfolio, which is the YouTube portfolio, and right now it's sitting at a value of just over $71,000, and we are up over 23% year to date. And here you can see all of the positions in this portfolio. Again, Super Microcomputer, we have 240 shares, up almost 70%. AMD, we have 39 shares, up almost 92%. We also hold United Healthcare Group. I added a little bit to this position. However, we are still down around 5.5%. I would gladly add more to this position, especially if this company continues to drop. And then down here, we have 75 shares of ZETA, down around 9.5% currently. So with that in mind, don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. Thank you guys so much for watching. Let me know in the comment section, are you a holder of Zeta stock? Do you have it on your watch list? Or what other small cap companies are you looking into? Thanks again for watching. If you haven't yet subscribed to the channel, subscribe and drop a like on the video. And as always, have a wonderful rest of your day.